Q2 and H1FY23 earnings conference call. We have with us today from the management Mr. B. Thiagarajan, Managing Director, Blue Star Limited, and Mr. Nikhil Sohoni, Group Chief Financial Officer, Blue Star Limited. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. B. Thiagarajan. Thank you, and over to you, sir.
Thank you. Good morning, ladies and gentlemen. It's a pleasure and privilege to join this call today. Thank you very much for sparing your time to attend this briefing from Blue Star on Q2FY23 results. I am going to give a brief introduction, after which Mr. Sohani will brief you on the highlights, and then we will answer your questions. If you have noticed all throughout in my television interviews and interactions with some of you and the press, I had indicated that the market is doing well. The demand for all our products and services, including cooling products, had been good. That's what I had been indicating, even though there had been many reports that the market has completely slowed down. Now, you will see from the results, all segments have done well. Specifically the room air conditioners, compared with last year or compared with even FY20, we have shown good growth. There was a second subject which was being discussed all throughout for the past 3 months, is that there is commodity price softening, and therefore whether the margins will improve. We had maintained that, look, it is not likely to improve, because we had raw material bought at old prices, and perhaps we have to look at the second half of the financial year. But then slowly we have been finding the exchange rate, it is not stabilizing. Rupee continues to depreciate. Of course, people say it is dollar strengthening than rupee depreciating. The fact of the matter is it is offsetting the commodity price savings that will be accruing from now on. So therefore, on the margin front, it is going to be a tightrope walk, but we have mitigation measures for Q3 and Q4. There are a few things that will benefit us to get back to the original margin levels. Now, I had indicated that apart from B2C, B2B businesses continue to do well with record level of order finalizations and the order inflows. And I had gone on to say that there is huge pressure to execute the orders, whether it is a large infra project or shop, showroom, boutiques across the main cities as well as tier 3, 4, 5 towns. That trend continues, driven by many sectors, whether it is apart from metro railway, it is water, it is connected with electrification, or it is connected with the retail segment or the food related segments, whether it is QSR, so on and so forth. There was another subject that was repeatedly discussed, was how the supply chain disruptions are impacting Blue Star. And I had indicated, and I continue to maintain, that you have to plan in advance. The inventory levels are going up. We may be holding something like 45 days inventory. Against that, we are ending up holding something like 75-day inventory. Whether it is a raw material of metallurgical nature or otherwise the components. I had also indicated prior to Diwali that this is a new reality. We do not know when things will normalize as far as the supply chain disruptions are concerned. The vendors across have been indicating that the China, some kind of stability you can see from January onwards, and therefore things may begin to improve. But as of now, there is no concern about supply chain disruption, except that the inventory levels we may have to do increase. Now, whether it will impact the capital employed, we have always, you are aware that we have been managing our capital well, and I don't think that is a challenge. But we would have preferred this supply chains to go away by now, but it is not happening. On the outlook, we are optimistic about the second half of the financial year as well. It is arising from the fact, number one, the room air conditioner penetration level is low, and I think this is a lean season, and the build up to the summer will be extremely good. And we have seen the residential property consumption or the rental levels that are operating, and the new homes being occupied should help that cause as well. Embedded in that is a question whether price increase will take place. We have to review that in January, because the product portfolio will again get reject with the new products coming in, which are affordable premium range as well. The fact is that the Sri City factory should be coming into operation, and that gives us some kind of competitiveness compared with the Himachal plant. So there is a second aspect to that. The third one is in the B2B part, there is a huge order inflow, and therefore carried forward order book, and order finalizations even in Q3 continues to be good. And I mentioned to you about the some part of it. We are mitigating by advancing the ordering and increasing the stocking levels. So therefore, while I have no insight further than what is available in the public domain on whether there will be a slowdown, how much it will impact in India, I'm not getting into. I am limiting myself to the financial year 2022-23. Keeping that in mind, I am optimistic about the prospects for the second half of the financial year as well. And with this opening remarks, I hand it over to Mr. Nikhil Savani to give you the update on the quarter.
Thank you, Mr. Tyagarajan. So good morning, gentlemen. This is Nikhil here, and I will be providing you an overview of the results for the quarter ended September 22. The sentiments in the Indian economy continued to be positive despite the ongoing geopolitical uncertainties and the impact that the strengthening dollar has on the global currencies. The capex by both public and private sector continued to be encouraging. Consequently, all the sectors that we operate in saw a healthy growth and enabled us to end the quarter on a positive note. Financial highlights for the quarter on a consolidated basis are as follows. Revenue from operations for quarter 2 grew by 27.1% to 1,577.6 crores as compared to 1,040 crores in Q2 of FY22. EBITDA, excluding other income and finance income, for Q2 FY23 was at 85.6 crores, the margin of 5.4% of the revenue, as compared to 70.7 crores, margin of 5.7% of the revenue in Q2 of last year. Operating margin was marginally lower in Q2 of the current year, owing input costs in certain segments and higher operating expenses. Profit before tax grew to 57.5 crores in the current quarter as compared to 47.4 crores in the quarter last year. Tax expenses were at 14.9 crores as compared to 15.99 crores in quarter 2 of last year. Net profit grew by 35.6% and it grew 42.6 crores as compared to 31.4 crores in the corresponding last quarter. So carried forward order book as on September 30 grew by 30.6% to a record 4,152 crores compared to 3,186 crores that we had as on September 30 of last year. Capital employed for the current September was increased to 1,441 crores as compared to 938 crores as of September 30, 2021. This was owing to higher inventory holding to mitigate the continuing supply chain disruptions and also the capital investment for manufacturing capacity in various expansion projects. Consequently, we ended the quarter with a net borrowing of 392.6 crores and a debt equity ratio of 0.37 on a net basis as compared to net borrowing of 44.3 crores and a debt equity ratio of 0.05 as on September 30, 2021. Coming to business highlights, the first segment that we have, that is electromechanical projects and commercial air conditioning. The segment revenue grew by 32.6% to 959 crores in the current quarter as compared to 723 crores in the quarter 2 of last year. Segment results are 6.3% of the revenue in the current quarter as compared to 46.5 crores, 6.4% of the revenue in quarter 2 of last year. Order inflow for the quarter grew by 68.9% to 1,198 crores as compared to 709 crores in the quarter 2 of last year again. Coming to the first segment, that is electromechanical projects business, the overall pace of execution remained healthy. We witnessed a strong uptick in inquiries and order finalizations in the data center segment, metro railways and factory segment. Inflow of tenders in the infrastructure sector continued to remain encouraging. We also booked our first order for railway electrification. We received our largest ever order for integrated data center project during the current quarter. Carried forward order book for the electromechanical projects business is at 3,054 crores as on September as compared to 2,240 crores as on corresponding last September. That's a growth of around 36.3%. Coming to commercial air conditioning systems, growth in demand across all segments that we operate in enabled growth in the revenue of commercial air conditioning business during the current quarter. We further consolidated our position in tier 2, 3 and 4 towns with approximately 65% of the revenue for the quarter coming from these cities. We continue to maintain our number 1 position in conventional and ducted air conditioning systems as well as coil chillers, and second position in VRF and screw chillers. Some of the major orders received during the quarter were from West Bengal Services Corporation, Noe Government Surat, L&T Hockey Stadium, Rourkela, etc., just to name a few. Coming to international business, growth across all segments and territories that we are present in. We further expanded our offerings across markets to cater to new customer segments. We witnessed strong demand for our conditioning and refrigeration products, and a few notable orders were received during the quarter from fast food chains like Americana, Domino's and Tim Hortons. We have also set up a wholly owned subsidiary in United States. The project business in Qatar continued to do well. The operations of the joint venture in Malaysia continue to be impacted owing to slowdown in construction and order finalization. We will focus on expansion of Blue Star product range and build brand awareness and brand visibility in different markets that we are present in. Coming to segment 2, that is unitary products. The revenue grew by 15.4% to 525 crores in the current quarter as compared to 455 crores in quarter 2 of 2022. Segment results were at 32.4 crores, which is around 6.2% of revenue in the current quarter as compared to 23.3 crores and 5.1 revenue in the quarter 2 of last year. We continue to expand our distribution footprint across the country apart from promoting our new range of affordable premium products. Cooling and purification products in this segment, seasonally lower demand quarter is the quarter 2 which we operate in this time, but our room air conditioner business registered a growth of 17%. The new energy labeling came into effect from July 1, 2022, and with all our products into the new BE ratings. We grew in line with the market and maintained our market share at 13.25%. The Sri City project is progressing well and is expected to commence commercial production early 2023. Coming to commercial refrigeration business, the business witnessed growth in demand across all segments with consumption levels back to normal. Demand for our supermarket refrigeration products retail segment continued to be encouraging. Demand from the hospitality sector also revived during the quarter. We continue to maintain our leadership in deep freezers, storage water coolers, and modular cold rooms. We also launched a new range of VC coolers with a wide capacity range to suit different customer needs. The last segment, that is the professional electronics and industrial systems, the revenue grew by 50% to 92.4 crores in quarter as compared to 61.6 crores in the quarter 2 of FY22. Segment result was rupees 13.8 crores. It was 14.9% of revenue in the current quarter as compared to 9.8 crores or 16% revenue in the quarter 2 of last year. We witnessed robust demand for medical diagnostic equipment with increased awareness and investment in healthcare sector post-COVID. Demand for non-destructive testing business as well as data security solutions for BSS also continue to be encouraging. Major orders were back from ArcelorMittal, Nippon Steel, Jindal SAW, HDFC Bank, Tata Steel, ICICI Bank, just to name a few. With a wide portfolio of contemporary products and solutions forming part of our offerings, the prospects for this business segment continue to be positive. Coming to business outlook, the demand for our products and solutions from the segments in which we are operating in continues to be good. We will stay focused on our mission to grow faster than the market, profitability improvement, and efficient utilization of capital, while continuing to invest in manufacturing capacity addition, R&D, and expansion of international footprint. With the push in infrastructure investments and commencement of capacity expansion cycle in the segment, we expect order inflows in project segment to remain buoyant throughout the year. On the other hand, low levels of penetration will continue to aid market growth in the room air conditioner business forward. Opportunity for our commercial refrigeration business is expected to be robust with growth in food processing and organized retail sectors. Further, the softening of the commodity prices and the higher level of indigenization will enable partly mitigate the impact of the depreciation of Indian rupee against the US dollar. We are optimistic about the prospects of our business in the second half. With that, ladies and gentlemen, I'm done with my opening remarks. I would like to pass it on back to the moderator who will open the floor to questions. We'll try and answer as many questions as we can, and to the extent that we are unable to, we'll get back to you via email. With that, we are now open for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Ladies and gentlemen, in order to ensure the management is able to answer all queries, kindly restrict your questions to 2 at a time. We have our first question from the line of Rahul Gajare from Haitong Securities. Please go ahead.
Good morning, sir. My question is on the revenue. Blue Star has actually bucked that trend, where most of the players or peers have seen pressure on their revenue growth and profit. Could you throw some light on what is it that has helped you, gain a market share, and is there any geographical contribution which has impacted this market share gain and revenue growth? That's the first question.
Thank you. I am first taking the B2C part of it, and was well known that our market share was not uniform across the country. There were certain parts of India we have been doing extremely well. Certain parts of India we have been not doing that well, specifically Hindi-speaking belt in North India. So we had stated the strategy is to do with the product repositioning and the distribution. So the product repositioning task is complete. Distribution is halfway through. Therefore, we could ensure that that part of the business grows. The second one is within that segment, if you are talking about cooling products, the commercial refrigeration. First of all, we have to also remember it was a COVID impacted year as far as commercial refrigeration is concerned. While the room air conditioner last year came immediately after the summer season was over, commercial refrigeration took time. So when you compare with last year, obviously there will be growth. But most importantly, that business is opening up, but not to the extent we would like. But one can expect CAGR of around 20% in commercial refrigeration business alone, driven by the processed food or the food retail, so on and so forth on one side, pharmaceutical on the second side, and the processed food being manufactured and exported or traded within the country. So commercial refrigeration is the second part of it which is driving. Now in order to pursue this growth, what we have done differently, it's our own weakness that we have corrected in room air conditioner, right? That we were not able to compete with a range of products in North Hindi-speaking belt, which we have come back with. Supported by the distribution, supported by making the brand relevant to them. That you are all aware, Virat Kohli was brought in for that particular purpose. So go to the commercial refrigeration, the market itself is growing, we stay focused on. We were very clear that we are not getting into large projects there. We will, our ambition is to remain number one in deep freezers and modular cold rooms, and which we continue to do. It is to do with positioning ourselves as leaders there. Come to electromechanical projects, we are very clear that we were playing a very cautious game of picking and choosing the segments in which free cash flows will be good. We were not chasing the market share there. And then we need to get we should be in the consideration set of the customers. We should be a preferred vendor for certain activity. Data center, we have positioned ourselves like that. In factory segment, we are treated like that. And we are having a situation, fortunately, the infra segment investments are happening. So as the competence, we are participating. That is the next reason. It's a favorable economic or market environment that is prevailing as far as infra-related projects are concerned, which is water and metro railway and power distribution. Come to the showroom boutiques, retail. After many years, the investments are coming back there. This Diwali, so many people wanted to open restaurants, so many people wanted to open retail outlets, and many of them had not renovated or expanded. All those are happening. It is a favorable condition. There, why we are succeeding? We are very clear that in ducted we will be, number one, we will further strengthen ourselves by introducing products that are world class. In VRF, from those doubtful days whether Blue Star will ever be able to develop and launch and sell a VRF, and we are a clear number 2 player there. And we will continue to grow. There the strength is the innovation and the investments that we have made in R&D as well as manufacturing. Professional electronic segment continues based on the capital cycle coming back. Investment cycle has come back. So this is what it is. So it is a combination of a favorable market environment and correcting our inherent weaknesses in certain cases like room air conditioner. In certain other cases, further strengthening and ensuring we grow. That is what has helped us to grow our revenue. This will continue to be the direction. Equally, I should also concede where we have not done well as we would have expected. I think in air coolers we could have done well. We could have done much better in water purifier. Don't ask me for that individual figures. It is negligible compared with the rest of the things. But these segments we are and some 4-5% kind of. We should be also attempting to grow there at 20% plus. That had not happened. Thank you.
Sir, thank you for the elaborate answer. My second question is on the the project business. How is the domestic tender pipeline and specifically the competitive intensity that you've seen change in the domestic project business? And given that you have intention to grow your international business, how do you plan to go about it? Do you have a limit for the revenue mix that you are looking at between domestic and international? Thank you.
So the competitive landscape there has not changed at all, because some player might have decided not to participate, but given that the entry barriers are not that high, with that big, there is always intense competition, and players actually reducing it to some L1 game. The contractual conditions of any kind are being accepted. Getting the contractual conditions imposed in this country and complied with is also very difficult. Of course, the laws have changed, but it is still very difficult. The third is that without understanding what it will take to run a superior project, the prices are being quoted. It is air conditioning is a sophisticated science, but unfortunately it is invisible as well. I have told in the same conference calls or in the individual interactions, the decision makers spend more time on bathroom fittings, more time on carpets, more time on paintings on the walls rather than the air conditioning. That is the reality. It is invisible things that order gets finalized. And look at the air conditioning cost as a percentage of the total project compared with the civil interior put together. It is still negligible, but unfortunately, it is driven to a L1 thing. And in my lifetime, whether it will change, I do not know. But the competitive intensity is high because of the industry players themselves reducing it to cutting corners and executing the jobs. That is how it is. The construction practices have not got modernized fully. And you are in a situation where the construction cycle is on. And you need to improve quite a few things, but that will happen only if the quality improves. So therefore, competition continues. Our strategy has been clear. A, whether we can deliver superior project delivery and go ahead and ensure that the best practices are followed there. Two, do not chase the market, and it has to be profitable and the cash flow should be good. And third part is that position yourself as a preeminent, undisputed leader as far as MEP services are concerned. Then you will be able to command some kind of premium. And I don't think today we command a huge premium, but there are very large number of customers who would like Blue Star to be the vendor. Some minor premium they may be granting. And I can imagine their situation also that they do have competition offering much more attractive prices. So this has been our strategy. We will continue with that. And I repeat, because construction cycle is on, we are not going to be chasing orders and grow the revenue at all. We will deliver superior projects in the country and we will continue to upgrade and modernize our practices, and we are content with what we are doing there. In other words, what I imply is that perhaps 20% to 25% growth we will drive during this construction, and we will continue to focus on 6 to 6.5% operating margin from that segment 1. This will be the direction. Thank you.
Thank you. We have our next question from the line of Ravi Swaminathan from Spark Capital. Please go ahead.
Hi sir, congrats on a good set of numbers. My first question is with respect to the project business once again. Given the fact that large orders are kind of flowing in, can there be any upside to the profitability that we are looking at? So basically, I mean, the ticket size would be large, and because of that, some operating leverage can be there, like data centers, etc. Do they carry better margins? And if you can also give the order book breakup, then it would be great across sectors.
Yes, it will be there because of scale, the operating leverage that you get. But it is not going to be in FY23. We still maintain 6 to 6.5% outlook. Basically because we are in a high commodity cycle, and these orders will not in full-fledged manner what has flown in, because it is all 18 months to 24 months execution cycle. Margin will continue to improve, but you may see the improvement in FY24 rather than FY23.
Got it, sir. And the order book breakup across sectors, so basically how much is infra, how much is commercial real estate, how much is...
We will go ahead and publish that we wanted to do, and we will some point of a time share with you. The question is, it is like this. It is today infra, factories and data center. Factories and data centers behave in the same manner in terms of the processes, and others in the building, so on and so forth, all are equal at 33.
Got it, sir. Yeah, thanks.
Thank you. We have our next question from the line of Vivek Ramakrishnan from DSP Mutual Fund. Please go ahead.
Hello. Hi, sir. This is Shalini. So my question is around the debt levels. Could you help us understand what has caused the debt levels to go up in September? And also just give us a guidance on how this number would look in the subsequent quarter. What is the peak debt level that we can expect?
Nikhil will explain, but before that, I wanted to share with you my disappointment. When we were surplus cash, people were not excited about it. They were saying for a company, it doesn't matter, whether it is a business channel, whether it is a financial press, and they said that, look, your leverage is very high, and what are you saying, you are surplus cash. Analysts by and large never bothered about it. It's a great achievement, okay? He will explain to you what is the reason for higher borrowings.
So you have to look at the net cash for the net position, of course, because there is certain surplus cash which the company retains, and at a net level, which you are seeing at around 392 crores. We also have to keep in mind that there is a lot of capital expenditure that has happened. If you compare it to the last year, as we have commissioned Sri City plant, there will be more than 200 crores of capex that would have happened during this period. But also the inventory levels will be slightly higher because of the supply chain disruptions. So we are not maintaining like earlier times 45 days inventory. We would be maintaining around 17 days inventory at least. And of course that will be a combination of raw material. You have some amount of pipeline stocks which are there, so which of course has come down now drastically. So all of these will have to be funded by some amount of debt. So you will see the debt levels go up. As we build for Q4, we have to stock again. So there will be some amount of debt going up as we go forward. But considering the thing that, overall the management is on this area, we always will try to maintain a very healthy debt equity ratio, which will not like to go out of hand. There will be enough focus on that. And the peak level as such can't be defined, but you can say reasonably it can increase by 100-150 crores at the max.
By the way, the debt equity ratio stands at 0.37. So what he meant is that the net borrowing level 100 to 150 crore more can go because of WADA deep freezer plant is complete now, and the CCT is happening, and increased working capital because the revenue itself has grown. So working capital turns, in fact, have not deteriorated due to debtors. It has deteriorated slightly due to the increased inventory holding. That inventory holding is critically important for maintaining the supply chain. And this is where it is. Thank you.
Okay, sir. Thank you.
Thank you. We have our next question from the line of Manoj Gori from Equirus Securities. Please go ahead.
Yeah, thanks for the opportunity and congratulations for good performance. So this has been the fourth straight quarter where we have reported extremely strong performance on top line and on margin in the UCP segment. So I just want to get some clarity. So if you look at over last probably couple of years, we have worked on product side where we have done the engineering and everything. We have worked on the distribution side, on the marketing side. So probably can you highlight like what are the other areas which we have identified where if we can structurally work upon and probably we can continue this momentum in the times ahead also?
Yeah, one is good question. Thank you for your observation. The very first thing that one will have to work is the frequency of major global events causing supply chain or exchange rates, so on and so forth. That you can plot it for the past 5 years. What are those events? Events seem to be very frequent. You take a Suez Canal to some China zero COVID policy to some Ukraine war onward, so forth. The resilience, how do we build, is one area we are working on because it is a reality. It is going to be quite a few things that are going to take place. The second is there are in research and development, you are in a market where it is price sensitive because the growth is coming from first-time buyers, tier 3, 4, 5 towns, aspirational middle class, whether it is B2B, B2C. If it is a B2B, you are having MSMEs or startups growing the market. So therefore, the expectation is it should be an affordable product because India will continue to be like that. There is a third area that if you have to expand many of you have asked that your export revenue is lesser, how you will play in the China plus one or the global supply chain, how Blue Star can participate. So there is work to be done in expanding our global footprint. We incorporated a subsidiary in US. And therefore, that is another area to be looked at. Then comes the manufacturing footprint expansion. So we do have CCT to be commissioned. It will be happening in record time. The trial production has started and the commercial production should be happening by January. So there is your ability to execute such projects compared with we were all doing some 500,000 unit plants. Now we are talking about 1.5 million kinds of plant sizes. So ability to be setting up manufacturing units and hiring talent and growing that. Now the last point is going to be the competitive intensity is going to be higher. Say for example, room air conditioner, many people are expanding the capacity, will be more production happening, everybody have to avail PLI, therefore people will have to go ahead and sell more because PLI x-axis may be the investment, y-axis is the incremental sales over FY21. So everybody have to show increment in order to earn the PLI from next year onwards. So therefore there will be intensity. While the market will grow, product will become affordable, there will continue competitive pressure. So how build capabilities to deliver competitive products through product innovation and other levers that you identify. So these are the areas which we will continue to work.
Thanks, sir.
Thank you.
That was very elaborated. So, just to continue, so if you look at probably on the distribution side, can you throw some data points like what it was, what it is currently, and probably what it was pre-COVID? And secondly,
I am lazy enough and reluctant to be looking at that figure even when my team says, for the simple reason, I never in the past 30 years believed that the distribution numbers will deliver real results. It is, they just put up a figure from 6,000, it has become 7,500, 7,500 to 10,000 number, 10,000 to 12,500 number. That is not the approach I would like to pursue at all. What is to be seen is that what is the potential of each of the outlets. So if India's market size is going to be 8 million units, what is Blue Star market share goal? So that number, how it divides into various states, various towns and various outlets. It is to be estimated. Unfortunately, that data is not available in one single source. Be particular about getting to that kind of planning. If it is Aurangabad, how many ACs will be sold? Each of the outlets, what is the potential? In that outlet, what is my share? And therefore, I am very particular. You can deliver that with 4,000 dealer network, 7,000 dealer network, 12,000 dealer network. And I think our problem is connected with not the numbers, but where we are getting that share. If my all India market share is 13.25, I am not getting 13.25 from the stores in which I am present. So therefore, I don't review this number at all. This number, according to me, even if I tell you, it is meaningless. Because by having one store, some 40 units being sold is of no use to me at all. So I am lazy to even look at the number these days. So I am very honest with you. So but the plan is that they are supposed to expand it by 30% this year. I'll check with my 7,500. 7,500. It's supposed to go to 10,100 or something. 8,000. Yeah, something like that. 9,000. And so I do not believe in some of you have closely discussed with me this subject. I continue to maintain that our problem is connected with not getting the share of business many counters.
Right, sir. So that was very helpful. Thanks a lot and wish you all the best, sir.
Thank you.
Thank you.
We have our next question from the line of Sujit Jain from ASK Investment Managers. Please go ahead, sir.
So beginning of the financial year, the commentary was from all the players to increase prices by the festive season to take care of the table change. That has not happened. Plus, we had thought of increasing 50 bits market share this year. So I just wanted to check, H1 market share, I presume, is 13.25%. Base H1, what was the market share, and is there a scope of delivering on that 50 bits improvement in market share? And I also wanted to check with you, how has been South this H1 in terms of how it has panned out for you in RAC? And is the competitive intensity increasing in South because everybody is putting their new capacity addition in South?
So good set of questions. Thank you. So the very first thing is my communication is very consistent that we had reviewed the prices. I am telling the periods. April 2021, July 2021, October 2021, and I said that we will look at the prices and again revise in 2022, January. Now, all these price increases took place. When it came to the financial year closing and the summer season, there was a question whether we will be revising the prices, and we had gone ahead and done some price revision, not to the extent we would like, in April 2022. The question was that will the prices be reviewed again during the energy label change? The energy label change related corrections have been kept in mind. In fact, quite a few models were future ready models. So even if the energy label changes, it will sail through. That is how it has been. Now, wind back. Commodity prices begin to soften. Therefore, what were the questions? Question is, will the prices come down was the dialogue till such time we got into a rate-related issue post the war. So we were, in at least 3-4 TV interviews, I asked why the prices cannot be revised downwards, but I maintained this, that if we increase the prices because of commodity prices. If commodity prices effectively comes down, we will be the first one to go. And if we are not doing, there will be a competitive pressure that will be happening. So this is the history. So another thing that happened, March, huge sales. April, huge sales. First 15 days, huge sales. And you are witnessing a situation where people say it will be a 90% growth, even some industry associations, 80% growth, there will be stock, etc. Second half onwards, it collapses. People end up carrying inventory, including ours. Okay. Then if you recollect, I had clarified that let us look at a great February, great March, great April. So it is better to look at January to June. I was also blamed by some that, look, you are diverting the attention by comparing 6 months versus summer only you should compare. Whatever way you analyze, you will now understand the market. I maintain that market eventually would have grown over FY20. That is what has happened. What was my outlook? Outlook was very clear that it will be 15 to 20% growth over FY20 will happen for FY22, partially due to price increase has taken place. But even if you look at the volumes, that kind of a growth will happen. 15% still for FY23 will be happening over FY20. There is no problem. So when one will look at the prices, all of us will begin to launch the products for the summer. And this supply chain within India would have dramatically changed. Like Bruce will be getting some products manufactured in Sri City. There may be competition which will be manufacturing there. And many would have commissioned their new backward integration initiatives. So the prices all will be changing, is my view, that January to February, period to summer, prices will change. Now, despite huge commodity price increase, the margin drop is not that significant. Actually, the margin, if prices one wouldn't have dropped, the margin would have dropped by as much as 10%. That one would be making loss. That's what would have happened. So the real price increase has helped, and I have been transparent enough also to tell one more thing that has happened is I don't think the advertising expenses happened to the extent it happened pre-COVID days. And it had almost, in my view, had dropped. Due to right reasons, that there had been adequate demand and there is clearness, and people have changed their marketing expenses mix. So advertising also has given leverage to industry. So therefore, the margin drop would have been significant. The industry may have done well, and I can talk for Blue Star. We have contained that margin erosion substantially by adjusting the prices. We will review the prices January, keeping in mind what is the portfolio, what is the demand, what is our internal supply chain mix of product categories or where it is manufactured. And this is where we stand. And my view is, I am not an expert, my view is, I think by then the supply chain related disruptions for the components would have eased to some extent, because I expect China to become normal, and I think exchange rate would have stabilized, and I don't think it will continue to be like this. So some point of a time it has changed. It maybe January is the time. So this is the overall explanation. Thank you.
Sir, what was the market share in H1?
Okay. You asked about the market. It is the overall today we will be at 13.25%. Our goal is by FY24 reach 15. And I think we will improve it to that 0.5%. We will improve in this financial year itself. So it should be 13.75 to 15. It should be possible for us. That is our belief, because I mentioned to you our distribution penetration is still work in progress.
Thank you. Ladies and gentlemen, due to paucity of time, kindly restrict your questions to one at a time. We have a next question from the line of Bhavin Vitlani from SBI Mutual Fund. Please go ahead.
I am stepping out for a TV interaction. You have to excuse me. Nikhil will continue.
So, late in the May, when you had an analyst meet, you had guided for unitary cooling margins rising to 8.5% this financial year. Apparently that supposed to be was the peak of commodity cycle. So where are we in terms of the guidance for this year?
We commit 8 to 8.5% by this financial year. It will happen.
Great. This last question is more of a balance sheet related. We have seen a consistent decline in the trade payable days, and that is resulting in increase in the working capital. So from 140 days in 21 March, we are now down to 80 days. So if you could just help us understand where do we see it settling and what is the strategy behind this?
See, when you look at the number of days, I think it's important to look at the period at which you are looking, because if you are comparing it to last year and trying to see the drop, last year was impacted in the first quarter very heavily due to COVID. And that means the turnover and the number of days at that point of time would not be comparable to this time. So what is the number of days? So that factor will have to be kept in mind. Otherwise, the working capital cycle, as we said, we are not seeing the big shift other than the fact whatever we are storing for raw materials to take care of the supply options. There is no change in either payment patterns or in terms of collections otherwise.
Sure. So we'll see. So is 80 a new normal, or we can see further decline in the payable days?
I think what we are seeing now is the normal. I think we will not see further decline.
Sure. Thank you so much for taking my question.
Thank you. We have our next question from the line of Bhumika Nair from DAM Capital. Please go ahead.
Yeah, good afternoon, sir. So just wanted to, a lot of plants are getting commissioned in this next quarter or so in the south market. Our plant itself will also start ramping up, plus there is Amber, and then there is Lloyd's plant as well, which is coming up. Do you think while on one hand there will be some settling of the cost structure in the upcoming season with supply chain and rupee, etc., but these new plants' increased cost structure can drive some competitive intensity in the market?
See, the plants I think which are being commissioned were anyway which were there for some time now. So of course they will all productionizing in some time. As we said, there is a huge potential. We have always said that there is 1 to 8% penetration. That is what everyone is counting on as to how we go deeper into the tier 2, tier 3, tier 5. How do we increase the penetration and how do we increase the market size? And as the market size increases, there will be enough for everyone to play out there. So I don't think there will be some amount of competition intensity which will increase. It will also result in the market getting penetrated more and more, and that is what will help. At the same time, There are opportunities globally, so the export markets will also open up as we go along, and that's where the capacities are going to serve. So I don't see any major impact of that. I think it's just a timing of the market which will determine how it's going to play out.
Sure. And so my second question is on our exports for ACs, where we were looking at some white labeling opportunities. If you can just talk about progress and where are we in that entire aspect.
So that there is work going on. As you see, there are the global footprints we are expanding. We will be coming back on the strategy as to how we want to do this business and what we are doing. There will be a common statement which will be coming out on that. So I think I would like to pass it. That's something which, as a company, we will be coming in next 6 months' time.
And wish you all the best.
Yeah.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question of the day. I would now like to hand the conference over to Mr. Nikhil Sohoni for closing comments.
Yeah. So thank you everyone, and thank you very much. With this, we will conclude the quarter's earning call. Do revert to us in case any of your questions are not fully answered, and we'll be happy to provide you additional details by email or in person. Thank you.
Thank you. On behalf of Blue Star Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
The conference is no longer being recorded.